and the code is GTUB 203. My name and my details are there. The course description. This is an intermediate financial accounting topics that you are going to undertake. It is designed to equip you, the students, with knowledge and understanding of the issues underlying the concepts relating the financial accounting that we are about to study. It will provide you with an overview in areas such as partnership accounts, manufacturing accounts, single entry and incomplete records, account for non-profit making organization, company accounts, and financial ratios. So by the time we are done with this, at least you get an insight of the various kinds of businesses we operate in Ghana and the kinds of financial statements they produce. Mind you, level 100, we talked about the sole proprietorship. So the sole proprietor does not come in here again. We have already dealt with the sole proprietor, and we are continuing with the basic accounting that we need to know. And let me repeat, you remember last semester, last academic year, I told you going through this course will not make you accountant, but it will give you an insight about what accounting is and what accountants do on a daily basis. And it can also whet your appetite for you to decide to pursue accounting program. All right, so let's look at the objectives, the brief objectives that will guide our studies. By the time we are done with the semester and I've gone through this course, it is expected that you'll be able to demonstrate your understanding, your knowledge of financial accounting. And then you should be able to also demonstrate an understanding of the main component of financial accounting. You should be able to identify the benefits of financial statement information to specific users. Don't forget, we've mentioned partnership, company account, account for non-profit making organization, manufacturing account. So you realize that all these accounts are tailored towards specific category of business operators and their stakeholders. So it is important that we are able to distinguish this and be able to understand the user's need. Okay. Then you should be able to prepare simple financial statement for various types of businesses outlined above. And then be able to interpret simple financial statement of various types of businesses using accounting ratios. So, as usual, you need to be present at lectures. You need to follow whatever we are doing, participate fully in all group discussion and tutorial sessions. You also need to write exams for you to be able to be assessed of your level of understanding and grasping of the course material. And you need to follow the policy of GCTU examination and classroom instructions. You know, we've talked about the policy of academic dishonesty in a level 100 course outline. So the same thing applies here. Academic dishonesty is highly not tolerated. So please do well not to engage in such acts because it comes with a host of consequences, which you shouldn't put yourself through that unfortunate situation and turn out to say, had I known, or turn out to blame the Satan who is resting somewhere, minding its business, and you want to go and put something around its neck. No, please, let's uphold issues that will cause us to be dishonest. Okay, so our schedules are as followed. Week 1, we'll deal with partnership. So everything about partnership, we'll talk about it briefly. If you want to read into details, you have every right to fall on the course materials to go and do justice to that. Then week 2, we'll look at single entry and incomplete records. That is if we are done with partnership. Then we'll also look at the third one will be account for non-profit making organization. We have businesses set up mainly not to make profit. So we'll look at their account as well. Then we'll also talk about a company account, what a company is, and then the accounts they prepare. The brief, we'll touch on the basic ones, not going into complex situations. And then we'll also look at financial statement analysis, which are the ratios, the various ratios that are used to do analysis of the health of businesses and then the financial strength of these businesses. We'll be looking at the peripheral, not so much to get you scared or something like that. So this is what we have as course outline. Any question? Any question? If you have any question, you can unmute yourself and ask. Hello, are you there?
Yes, sir.
Yes, sir, we are here.
Any question?
Yes.
Okay. Silence means no question. All right. So we begin with our first lecture, which is accounting for partnership. Let me take a brief detour from the class. What is a partnership business? Or what is your understanding of a partnership business? When we say partnership in business, what does it mean? Okay, wisdom.
To my understanding, it means a business that is owned by more than one person.
Business owned by more than one person. Okay. Thank you. Any other person? Any other? Yeah, Stephanie.
Yes, sir. And so partnership business is a business that is owned by two and not more than 20 people, sir.
Okay. 2 and not more than 20. Okay, thank you. Yeah, thank.
Thank you, sir. Partnership is a business that's,
Please, we can't hear you. Speak up.
yeah. So can you hear me now?
Go ahead.
It's where two or more people come together to combine their resources.
That's all. Okay, thank you. Any other? Any other?
Hello, sir. Hello, sir.
Please, if you want to talk, put up your hand. Just put up your hand and I'll see it here and call you. Okay, Steven.
Hello, sir. Okay. Partnership in business can also, my understanding is when two or more people come together to establish a company and they could have a mutual agreement. It could be official or non-official. Thank you, sir.
Thank you. Okay, Alfreda.
Sir, please, partnership is where two or more parties agree to co-own or operate a business together, whereby each party contributes capital, skills, resources, or labor.
Good. Thank you. That's very good. Michael AJ.
Okay, it's a form of business ownership whereby two or more people come together to do business with the aim of making profit. Thank you, sir.
We didn't hear you all. Your line is scratching too much.
Is it
Repeat.
okay now, sir, please?
Go ahead,
Hello,
let's
sir. Is
see.
it okay? So it's a form of business ownership whereby two individuals or more come together to do business with the aim of making profit.
All right. So I've added one of the ingredients I'm expecting with the aim of making profit. Okay. Right. Somia
Yes, so
Frank.
partnership is a formal, yes, it's a formal arrangement in which two or more individuals agree to manage and operate a business together by sharing its profits and losses and responsibilities.
Great. Thank you. Okay. So I think uh, all of you, all that you contributed are in line with partnership arrangement. So now let me ask. So as I said, one of your colleagues put an icing on the cake by saying that with the sole aim of making profits, very, very key. Partners don't come together with the aim of making losses. They come together to make profit. Okay, so just as we were saying, so one of you puts the icing on the cake by saying that with the sole aim of making profits. And I said that was a spot on definition or understanding, because individuals operating their business, making their money, will not come together with a view of making losses. No, it will not happen. So it is true. Yeah, the definition you've all given, spot on. And then one of you also said a minimum of 2, a maximum of 20. That's also spot on. Now, let me ask this question. When you say 2 or more persons coming together to operate business, what is your definition of persons in this case? What is your definition of persons in this case? Those of you who gave the definition, is it 2 or more persons coming together to run a business? And my question is, when you say 2 or more persons, the word persons, what does it connote? Or what is your understanding of persons as you've stated in the definition? Yeah, Alfreda.
Please, the parties involved. It can be the managers, the employees, the employers, and the entrepreneurs.
Okay. Okay. Stephanie, please mute yourself if you are not raising your hand to be called. Okay, thank you, Alfreda. Any other individual, any other person? Her understanding of, or her definition of persons means the managers, the entrepreneurs, the business owners. They are in that category. Okay, Michael J. Michael, go ahead. Okay, Michael has dropped. Somia, Frank.
Michael is here, please. Sir, I'm here, Michael.
Go ahead.
Okay, I'm saying so in this context, it would have to do with legally recognized entities. So, for example, natural persons like myself and then Richmond or Paul or Juliet or any other person. And then you have the artificial ones, which would have to be with, businesses partnering to do, business.
Okay.
Yes, sir.
All right.
Thank you.
You might speak.
Very, very, very spot on. So when we talk of persons, it is not only natural persons. It was artificial persons, like businesses can also go into partnership. They can go into, and they do go into partnership a lot, aside individuals. Somia, your hand is up. Any question?
So the persons
Rahel,
yes,
mute yourself.
I'm here. So the persons in the definitions means there could be individual persons, individual or entities or companies.
It could be what?
It could be individual persons, as in people or entities or companies.
Yes. That is it. Okay, thank you. So now let's go to the slide and see what is there. So at the end of the session, we should be able to identify, you, the students, should be able to identify and explain the characteristics of a partnership, describe the main features of partnership agreements and the rules governing partnership in Ghana. You should be able to explain the purpose and be able to prepare a profit and loss appropriation account, and then be able to prepare current account, capital account, and financial statement of partnership. So under this session, we'll look at the definition, the nature, the partnership agreement, and then the financial statements of partnership firm. Now, when we talk of partnership, the definition is here. So we said Incorporated Private Partnership Act, 1962, Act 152, governs partnership business in Ghana. So if anybody, any group of persons wants to come together and set up a business in a form of partnership business, they have to go under this law. The guiding principles of such businesses operating in Ghana are directed and guided by this act. This act says that a partnership is the association of two or more individuals carrying on business jointly for the purpose of making profit. And this can be seen under Section 3, Subsection 1 of the IPPA, that is the Incorporated Private Partnership Act. So the maximum number of persons per the Act 2 of the Act. And that's this type of business is formed by a formal agreement. Known as partnership agreement or partnership deed. With any association to be partnership in nature. But the law is a partnership business and what is not a partnership business. So partnership is not one. A family ownership or co-ownership of share any profit made by the two, the remuneration of a servant or an agent of a person and profits of the business shall not necessarily make the servant or the agent a partner. So with this, who can explain and give example for the first one, that this is not a partnership? Who will help us? A family ownership or co-ownership of property, whether or not the family or co-owners share any profits made by the use of that property, is not partnership. Yes. Any contribution by way of explanation and give an example? Hello? Okay, Tay.
Sir, please, can I say the same as sole proprietorship?
No, that is not the meaning.
Thank you.
Any other? Yeah, Stephanie. Stephanie Nati.
So sorry, sir. I didn't know not unmuted my microphone. So I was saying that my little understanding on this is that, say a family has lost their beloved, and then in memory of their beloved, they say build a guest house. Even though they have built the guest house and then they are getting profit out of the guest house, it is not a partnership business. Yes, sir. So there's my misunderstanding.
Okay. Thank you for your contribution. Mike.
Okay, sir. I think the element of intention is missing here. So specifically, the intention of making profit is not there. So co-ownership doesn't necessarily translate into, an intention of making profit. That is what I have to say.
Okay. But Michael, look at the second line. It said, not a family or co-owners share any profit made by the use of that property. So the intention of profit is there.
Is there? Okay. Share any profit.
Mike, do you see it?
Yeah. I realized that. I'll come back.
Thank you. Any other? Yeah, Paulina.
Yeah. Oh, sorry. Please, how I understand it is that when a family or family members come together to do business, it's not partnership. Or when you co-own a property, it doesn't mean it's a partnership. Thank you, sir.
Okay. All right. Okay. So if you realize one of your colleagues says, is it that it is seen as a sole proprietorship? And I said, that is not the reason. Now, okay, let's take the second part of it. The second part of the explanation before I come in with to add more to the explanations you have given. All the explanations you have given, you are on track, but I'll add my voice to it, then we'll make it solid. The second one says, the remuneration of a servant. The remuneration of a servant or an agent of a person engaged in business by a share of profit of the business shall not necessarily make the servant or the agent a partner. Any contribution, explanation to this bit of aspect of the slide? How do you understand that one too? Okay, Ryan.
Sir, I'm thinking that co-owning a business is not the same as running the business if they are not participating.
You are still on the first one.
Yeah.
I'm talking about the second one. Remuneration of a servant or an agent.
Okay, I'll come back.
Of a business by share of profit does not necessarily make the servant or the agent a partner. Okay, Bismarck, Oman.
Okay, so it's trying to talk about if a servant or an agent is paid a percentage from a business, that doesn't mean that that person is a partner in business.
Okay. Okay. Sabute.
Okay, say, okay, for example, I have a company and I have an employee. So whatever come as a profit, for example, marketing company, whatever comes as a profit, I give him a commission or a share of the profit. That doesn't make him a partner, but the person still remain my worker or my employee. That's how I understand it.
Okay, very well. So he has given us the practical bit of it. Thank you. All of you, what you have said, it's in line. So now when we take the first one, that's what it means. Let's take it that we are a family, and then our father passed on. And then in bequeathing his estates, or our mother passed on, and they were into business. And in their will, they categorically stated that the business should be operated, and at the end of the year, the profits of the business should be shared among the children in this order, in terms of percentages, or all the estates of the parents has been shared among the children in terms of percentages. So the children now allows the managers who are operating the business, and at the end of the year, they come together, look at the net profit made, and then they share the proceed according to the percentages that their parent has outlined in their will. Okay? Now, this particular arrangement does not make the siblings partners of the business. They are not into anything partnership. It is just a family property that has been assigned to them in terms of percentages. So they cannot claim to be operating a partnership business. Because one, they don't have any legal document stating, following the IPPA Act, and stating clearly, copiously, contribution in terms of capital and how profit and losses should be shared. So this particular one does not make them partners. The same thing applies to husband and a wife. Husband and a wife cannot form a partnership business because they are one. And family members too cannot come together and say they are forming a partnership business. But if one, family A and family B can form a partnership business, that one is allowed. Then two, the remuneration of a servant or agent of a person engaged in business by share of profit or of the business shall not necessarily make the servant or an agent a partner. Yes, just as our brother said, he has a company, an advertising company, and the workers that he is working with, when you go and bring the business, there is a percentage of the fees that are charged for you as your salary. So if we all know that, okay, if I bring a business, my percentage is 20%. I cannot base on that 20% and say that I have a share in a company and that I'm a partner. No, It doesn't work that way. So partnership is strictly regulated by the acts, and the acts must be followed copiously. Okay, right. If you have any question, any addition, you can raise up your hand and I'll call you. I've seen that some of you are writing some things in the chat box. So I said, please, do shareholders become partners when they buy shares in the company? When we get to company, we'll talk about it. Companies don't deal, companies. So please, what if the legal documents were handed over to the children before the man died? Now it's still okay. Let me pick questions. I'm seeing Gilbert Achampong. Gilbert.
Yes, sir. Good evening. Sir, good evening.
Good evening.
Yeah, I want to ask a question. Let's say, for instance, my sister is Tracy Kumsin, and she has its own company, and me to have my own company. Then maybe for one or two reasons.
Your sister is what?
Tracy.
Your sister is what? We are not hearing you well.
So I'm saying that, let's say I have a sister.
I'm saying maybe I have a sister who owns her own company, and I also own my own company. And for a reason, we came together.
Okay, let's hear you.
Yeah, so I'm saying that I have a sister who owns her own company and my own company, different company. Then for all maybe any other reasons, we see that we can be a partnership because of one or two reasons. Can that be considered as a partnership?
Yes,
although
because
we are
yes, because they are two different companies.
Okay, sir.
For that one,
okay, sir. Thank
legally,
you.
they are two different companies. They can go into it.
Thank you, sir.
Okay. Yeah. Rahel. Rahel.
Sir.
You put up your hand, pay attention. When I call you, then you respond.
No, it's my device. Sorry, sir. It's my device.
Go ahead.
I was trying to say that I'm even confused now. If you have a so I'm coming. I was
Somia.
Lost in thought, sorry.
Somia.
So I want to better get the understanding that two siblings who do not own companies, they are just individuals, cannot come together to form a partnership business. I
They
just
are
want to get
families.
understanding.
Yeah, they are family members.
So it's impossible for family members to form a partnership.
No, family members don't form partnership.
Unless they are individual companies from the same family. That one is possible, right?
That one, yes.
Thanks so much, sir.
Okay. Yes, Paul.
Okay, thank you, sir. So in that view, I want to just give a follow-up question to Sumia's question. So in that view, if we are two brothers, siblings, and we form a company, so is that one a sole proprietorship or what would you call that company?
Under what law are you forming that company? Is it under the Companies Act? Is it partner? How do we call it? Sole proprietorship or what?
Yes, let's say under the Companies Act.
And so that one is a legal business you have formed.
Okay.
So now you can use it. Okay, let's so the nature of partnership. The nature of partnership. It's a firm, just as any other corporate body. It is formed by a formal agreement, that is partnership agreement or partnership deed. Partners are jointly and severally liable. So what it's saying is that if one partner goes and then transact a business in the name of the partnership business, ratios. If he goes out and then mess up in a business transaction and there is a liability, all of you will be held accountable. Acting in a normal course of business carries out, one partner is sued for wrongdoing. The other partners may also be sued. Reason being that maybe the one partner that is sued might not be financially sound to pay off the liability. So when the one who sued the partnership business got to know that there are other members associated with that partnership business, then the person can counter sue them, add them to the suit, and then be able to recover his or her locked funds. Partnership liability is unlimited, just as a sole proprietor. Partnership liability is unlimited, just as a sole proprietor. The relationship between partners are fiduciary one. When we say fiduciary relationship, what does that mean? Every partner is also an agent of the firm. Every partner and acts on behalf of the firm, of the partnership business. Now, when we say partnership relationship is fiduciary one, what does that mean? Randolph, you want to explain?
Yes, sir. Good afternoon, sir.
Afternoon, how are you doing?
I'm doing well, Chief. Yes,
Good.
so I wanted the clarity on the when the partner is sued or one person is sued, they can come and sue the other person if they realize that the one that have been sued has no funds or something. But what I want the clarity I want is when he's sued in what capacity? Because if he's an individual, though a partner, but then he has done something on his own and have an issue with the police or any other person, or if, because I'm thinking that if whatever he's being sued for, it's concerning the firm or the partnership that they have put together, then yes, if one partner is sued and they are not able to recover, or they can sue the other partner. But then if it's his own private thing, can it also be enforced as such?
No, if it is private issue, it cannot be enforced. Here we are talking about in the normal course of doing business on behalf of the partnership.
Okay, sir.
All right. Thank you. When we say fiduciary relationship, what does it mean? All partners are in a fiduciary relationship with one another. Yeah, Kwame, I'm sorry.
Okay, sir. So when you talk about the partnership in is it fiduciary relationship?
Yeah, the relationship
So,
between them, it's
okay,
fiduciary.
we are talking about partners must act with trust, honesty, and good faith towards each other.
Thank you very much. So that is it. They have to act in good faith, honesty. One should not think that he is smarter than the others. Okay. All right. Let's move on. So, partnership agreement. What do we expect to be contained in the partnership agreement, which is also known as the partnership deed? The information contained in the partnership agreement include: 1, the name and nature of the business of the firm, the name of the firm, and then the nature of the business they want to carry out. 2, the accounts of capital, the amount of capital to be contributed and maintained by each partner. The amount of capital to be contributed and maintained by each partner. 3, the rate of interest, if any, to be paid on capital. To be paid on capital contributed. Okay? Partners must agree on that. Okay. 4, the extent to which drawings are allowed and the rate of interest, if any, to be charged on drawings. So in partnership, partners are allowed to withdraw their profits shared for the year, or some are even allowed to withdraw to the extent of even touching their capital. It depends on the arrangement. It depends on the agreement put in the partnership document and signed too. The remuneration, if any, to be paid to partners for their services. You know, we have different types of partners. We have the active partner, the quasi partner, the dormant partner, or the sleeping partner. So which type of partner have you opted to be? If you opt to be an active partner, then it means that you are going to run the business on a daily basis. You go to work just as all workers will come to work, and then you close with them. Now, if any partner opts to be an active partner, then at the point of drafting the agreement, it must copiously be stated